So, how to start a successful trading career? How do you get foot in the door? So this is a question that I got from BK, right? Hey, do you have any advice for new traders who want to pursue this as a trading career? I'm managing a fund and got a bit of experience in backtesting and portfolio management. However, I don't have any connections within this space or a finance related major. I'd like to hear from your experience. Thanks. So I'm sure most of you can relate to this, right? You don't have the relevant experience, you have no connections to anyone in the industry. How do you set foot in it? Okay, so this is what we'll cover in today's video. So to get started, right, I firstly want to walk you through the different paths that you can take, right, in your trading career, right? You have the hedge funds approach, the banks, and the prop trading firms. So let me explain what this entails, right? So for hedge funds, right, what they do is that they take in investors' money. They invest and trade those money to earn a positive return. So for hedge funds, right, they can pretty much do anything and everything. They can go long, they can go short, they can trade stocks, bonds, futures, FX, whatever, right? They can pretty much do all this because it's a very loosely regulated industry. So for hedge funds, right, their strategies, their methods could be things like, investing based on fundamental analysis, right? Identifying value stocks, maybe identifying growth stocks. They can trade or invest based on macroeconomics, right? Identifying where the economy is heading, right? And then making, speculative bets on the economic direction. Or they can use, systems trading, algo trading, right? Like, trend following, right? To base their own trading decisions. So you can see that hedge funds, they have a multitude of different trading strategies, and usually different hedge funds would have different methods that they focus on. So for example, CTAs, right, commodity trading advisors, they usually focus on systems trading like trend following. Hedge funds like fundamentals, they usually focus more of value investing or maybe growth investing. Then there are hedge funds that just trade or invest based on macroeconomics. So many different type of hedge funds with different approach that they can use. And one thing about hedge funds is that their duration of their trades or investments, right, can range from minutes to days to weeks to months even. So the spectrum is really broad. It really depends on their trading method. Like for example, investing the markets, right, using fundamentals, you would need months or even years for your ideas to play out. Whereas systems trading, like maybe algo trading, okay, that could trades could last for just days or maybe even minutes, right, depending on the frequency that the hedge fund is operating on. So that is for hedge funds. The next path is banks. Okay, so banks are quite interesting because 20 years ago, banks, right, they could take speculative bets like hedge funds, right, to profit from a market direction and stuff like that. But recently, there's something called the Volcker rule. Well, it's not recent; it's been around for quite a while, and it actually prevents bank from taking huge speculative bets, because if the bank were to take bets, right, and they get it wrong, it would make the bank vulnerable and the bank could collapse. Like for example, Bear Stearns, right, that collapsed. Or I think even was it the one that Nick Leeson caused the banks to collapse? Was it Bear Stearns or is it Barings? I can't remember. But basically, right, banks don't want this vulnerability anymore, where a rogue trader goes wild and the bank loses everything. So this is what the Volcker rule tries to prevent. So now, mainly, right, these days what banks do is they provide liquidity in the markets, right? They don't take on speculative bets, right? But rather they provide liquidity in the market. So what does it mean, right, to provide liquidity in the markets? So let me just share with you an example. So let's say, for example, a car company, right? Let's call it Ford. Okay, it builds car, needless to say, and it wants to buy some tires. Okay, let's say from company, let's call it company T, right? Tires from a company in India. Okay. So he wants to buy tires from a company in India. So this was India, and the thing is that in India, their currency is in Indian rupee, and Ford in US is in USD. So what happens is that, needless to say, right, Ford don't have a bunch of Indian rupees laying around in their company. They need to go to a bank, right, an intermediary, to exchange, right, their USD for Indian rupee. So they sell the USD to the bank, and the bank will give them Indian rupee, and then from there Ford can make the transaction with the tire company, right, in India, to buy the tires from this company in India, right? So as you can see, right, what banks does is that they are a liquidity provider in the markets. They help facilitate this currency transaction, right? So corporation, institutions that need to exchange a bulk of it, for example, forex currency, right, the banks will be there to facilitate this transaction. So how do the bank earn? Simple, they earn from the spread, right? I mean, if you're trading FX, you know what is the spread, right? For example, you see on most of the retail trading platform, euro dollar, the spread is like 1 or 2 pips, right? But if you go down to the bank right now to just do a simple currency exchange, like maybe a $500, $1,000, the spread is not going to be 2 pips, right? It's going to be like possibly, 100 pips, 150 pips. So this is how the bank earns, right? They earn from the spread difference between the bid and ask. So this is what we call liquidity provider, otherwise known as a market maker. They make the market. And moving on, right? Prop trading firms, right? So prop trading firms, it's a little bit different from hedge funds, is that they trade their own money. Usually, right? They don't take in investors' money, right? But rather they trade their own money. And the money usually comes from the bosses of the firm, right? The boss of the firm is usually a trader himself, and he has excess capital to allocate. So he might allocate it to his traders to trade different strategies. So this way, his own earnings, right, is not just dependent on his own trading, but rather by the different traders, right, that he employ. So for prop trading firms, right, they employ different strategies. Can be scalping, day trading, systems trading, but generally they are more short-term oriented. They don't hold positions for months or even years, right? Unlike hedge funds who adopt a fundamental approach, right? Prop trading firms, their trades are usually short-term oriented. So this is why they hire more of a short-term traders, or they apply systems, right? They are more on the shorter-term frequency. So now why am I sharing all this with you, right? Because this is important, because when you want to get a career in trading, you have to know first and foremost, right, which is the right type of firm for you. Is it a hedge fund? Is it a bank? Or is it a prop trading firm? Once you know which type of firms that is relevant to you, you next have to ask yourself, does the firm employ strategies that is similar to the way I trade? Because, for example, if the firm, a prop trading firm, is solely, trading, systems trading, and you're a discretionary trader wanting to apply a role down there, it doesn't make sense, right? Because your skill set doesn't meet their needs. Right? It's like, I want to buy a car that is fuel efficient, and you go and buy a Ferrari. Doesn't meet your needs, right? Doesn't make sense. So you have firstly to know, right, what are the different type of firms out there, and then what are the strategies they employ, and only then, right, can you find the right firm that meet your needs and you meeting their needs. Okay, and needless to say, you have to ask yourself, where's the demand for your skill set? So for example, this person BK, it's backtesting and portfolio management, right? If you ask me, possibly in the hedge funds, or maybe in even in prop trading firms, if the strategy, right, is more short-term oriented. So now, how do you find a trading job, right? So firstly, the easiest one is go to jobs portal, right? I'm sure whichever country you're from, you have a jobs portal down there which advertise, job openings. Go down there and look at which jobs, right, meet your needs, right? You might have to, go every day, refresh the page, do it. Second thing is Google, right? So I'm sure if you are interested in trading, right, you would have some idea of the firms that exist in your country, right? Maybe some hedge funds or prop trading firms. Google their address, okay? And if their mandate, if their trading philosophy is similar to yours, right, go down to their firm personally. The physical address, you can just Google it. Nowadays, nothing is hidden, right? Google their physical address, go down door to door, knock on their door. I mean, don't pester them, and just submit them your resume. And your resume should at least, right, show, right, the passion that you have for trading, and the type of trading approach, right, that is actually very similar to what they're doing, right? You want to have a match, right? You don't want to go to a firm that specializes in, for example, scalping the markets, and then you go down there and offer a value investing investment strategy. It is ridiculous, okay? So again, you want to meet the demand of the marketplace, right? You don't want to offer something that is irrelevant. So again, Google their physical address, knock down door to door, submit your resume. That is powerful as well. And finally, you can use LinkedIn, right? It's a professional platform, kind of like Facebook, but for professionals. And then again, once you Google, right, you know who are the one in charge of the firms, the hedge funds, right? Maybe the HR or the CEO, whatever. You can find them on LinkedIn probably, right? And then you can just, send out a cold outreach message. You might have to get a LinkedIn paid account, a paid service for this, but it's not going to cost much, right? So you can cold outreach to them, talk to them, express your interest, right? And how you can be of benefit to the firm. Okay, so this is 3 ways that you can get a trading job. And let me share with you, right, how I actually did it. So, as you know, right, I got started in the prop trading industry, and I was just like you. I had no connections. I had no experience in the trading industry besides, trading my own little small retail account. So what I did is that when I graduated, I went down to jobs portal at the time in Singapore, right? I think some of the jobs portal were JobsDB, Jobs Central. I'm not sure if those are still relevant today, but those were the jobs portal back then. And I was, looking for trading jobs. I just like trading jobs, proprietary trading, because that's where I wanted to go in, right? And to be honest, there wasn't many in my country, so I had to, be there every single day. I was just refreshing the page, seeing whether there are new openings each day, because whenever there's a new opening, right, and I've not submitted my resume, I'll be one of the first to right, just submit the resume to the company or to the agent, whoever. And also what I did is that I started Googling for prop trading firms in Singapore. I just like proprietary trading firms Singapore, and I found address of these firms, right? So again, my resume is already completed, right? I already expressed my keen interest in trading, right? So I go down to the physical address of this firm, I knock on their doors, and I just, I didn't want to bother them. I just, say, hey, I'm interested to, work for your firm. Here's my resume. Have a look at it, right? And let me know what you think, right? Just 30 seconds. That's it, and I'm out of there. And I still go down, looking professional with a shirt, pants, and a tie, even though I wasn't even going down for an interview, but I wanted to do this the proper way to leave a deep impression. Okay? And when I went for interview, right, if I do, was granted an interview, I bring down my own trading results, my records, my journal. Even though at that point in time, I wasn't a profitable trader, I just wanted to bring down and share with them, right, my thoughts on the market, why I took certain trades. This really made me stood out from the other participants who just submit a resume, go down and get interviewed. Whereas for me, I come into the interview prepared with evidence, right, of my passion for the market. So, for example, BK, you are doing with portfolio management, backtesting. Bring down the results of your backtest, right? Share with them, the strategy that you employed, you backtested, and what were the results. And trust me, you don't have to be afraid of them stealing your strategies, because chances are, right, the strategy is probably, used by someone else out there if it really works, or chances are it doesn't even work at all. But at least go down there, show them that you're genuine and you're willing to give, right? And that really, right, would put you in a different league, right, compared to the other interview participants. Okay, so this is actually how I did it, right? I went jobs portal, I did the physical address, door to door, I bring all these results down for the interview, and fortunately enough, right, I did eventually land a job in proprietary trading. So a quick recap, right? First and foremost, ask yourself, right, where's the demand for your skill set, right? There's an R missing here, where your skill set. You can go down to jobs portal, and go Google their physical address and knock door to door. LinkedIn for cold outreach, and then, come with proof of passion. Don't just talk on it, right? Just bring down the evidence to show that you're really serious about this business. And it's very easy to do so. If you're already trading, if you're already, in the market, just print out your, trading record, your backtest results, your journal, whatever, bring down and show them that, man, I'm in this for the long haul. Okay, so this is how you go about, getting started in your trading career. I hope this helps. And hey, for those of you who are still watching, right, do me a favor, hit the thumbs up button and click the subscribe button below, so this way whenever I publish a new video, you'll always be updated. Okay, so if you have any questions for me you want me to answer, leave it below this video in the comment section and I'll do my best to help. So with that said, I wish you good luck and good trading. I'll talk to you soon.